Hello, warm welcome to your decoding of the ET Wealth newspaper, and I'm Priyanka Bhatia from Women on Wealth. How are you doing? Did you read the ET Wealth newspaper? If yes, which article connected with you? I read the ET Wealth newspaper every Monday, 8:30 a.m. to 10 a.m. That's my schedule. I have kept 90 minutes to conveniently, easily, at ease read the ET Wealth newspaper. It is my habit. It's a weekly newspaper, and I am not paid by Economic Times to promote this paper. I've been reading it for a decade and I've been benefiting, and so I bring the conversation around it. I decode it every Tuesday and I read it every Monday. Reading is an important habit for any investor, is how I feel. The more I read, the more it allows me to gym my mind, the more information I seek, and then I start putting it to use with regard to the future that may be coming up ahead. Hi Diksha, good morning. Hey Usha, Kaveri, good morning. So today the article we're going to decode is alternative investments. Can they work for you? New platforms are offering exotic investment options to small investors. Find out if you should opt for these. So this is the conversation that we are going to have today, and let's see what all is in store. Hey Kavleen, good morning. So good to see you after long. Okay, so there are various kinds of alternative investments which are being talked about in this article. A lot of us here invest in stocks, mutual funds, gold bonds, NPS. Some of us also do fixed deposits for short-term goals. Our parents have been doing post office investments and more. So the article says that the average investor doesn't venture beyond this basket. And well, I fit in there too. I do not venture out of stocks, properties, businesses, because these have been the three top ways to create wealth. And it says that at best, some are willing to explore NCDs, non-convertible debentures, or company deposits for higher returns. But there is a world which is beyond these everyday products. And till now, the preserve of deep-pocketed investors, alternative investments, are now available even to small investors. So in this article, we're talking about alternative investments which are available for small investors and if you should invest in them. So that's the conversation that we have, and it says that as returns from traditional investments listed equities, bonds, gold have turned sour all at once, this new arena appears tempting. One can potentially earn post-tax returns of 11 to 13%. You heard it right, 11 to 13% post-tax or even more. As enticing as it sounds, this is uncharted territory for small investors. So this is an uncharted territory for small investors, and before you jump in, make sure you fully understand the risks involved. Right? So you may need to make sure that you understand all the risks which are involved. And in this story, we will examine what are those different alternative investment options and help you weigh the potential risks and rewards. So let's look at what are the risks and the rewards. Number one is something called P2P lending. Okay, it's called peer-to-peer lending. P2P stands for peer-to-peer lending. What is this? Well, this is explained beautifully in the article. Let me say. So step one is, say an individual, he or she wants to lend money. So they will open an account with a P2P platform and they will become a lender. He or she will become a lender. And those who require a loan register themselves as borrowers. So, and this is both, the lenders and the borrowers are going through a verification process. So now two people get listed. One is a borrower, one is a lender. Borrower is a person who wants to borrow money. Lender is a person who wants to lend the money, who wants to loan the money to people. Step 2 is the platform evaluates the borrower's risk profile. Now, can the borrower pay off the credit he or she is taking? Okay. So the platform evaluates the borrower's risk profile, mostly using tech-driven background checks. Then step 3 is, based on this assessment, the borrower's credit worthiness is decided. So how credit worthy is the borrower, that gets decided with this assessment. And then they are assigned some appropriate risk buckets. And then registered borrowers, investors can send proposals to each other. So proposals are sent and relevant information is shared. How much is the loan amount? How much is the interest rate? What's the tenure? And the platform then matches the borrowers with the lenders. And it can do it on its own. So if the proposal is approved, the two parties sign the formal contract after they agree on the amount and the interest rate charged for the same. Then the lender starts receiving the regular loan repayments from the borrower as per agreed terms. So that is what happens, and the platform continuously monitors the borrower's profile and assists with recovery in case of default. So this is P2P lending. So what do you think? Tell me, guys. Now that you know what is P2P lending, would you want to explore this? Would you want to try it on? So start sharing. Hey Rakhi, Preeti, Sandhya, Sunita, Rajeshwari. Good morning my people. So my question to all of you is, would you want to explore P2P lending? If yes, then why? If no, then why? Okay. Preeti says not for me at all. Why, Preeti? Guys, Preeti is 60 plus years old. Okay, so let's hear a perspective. Because she joined the course, the Money Gym program, to review the investments she had already done, to see how good these investments are. Okay, Rakhi is saying no, I ain't going to invest because this is very risky. Okay, so Rakhi, could you start sharing what appears risky to you? Like, why do you say, oh, this is very risky, I shouldn't be there? Sunita, you find this option very risky, got it. So what's keeping you away? Please start sharing. Aren't stocks risky too? But you all have learned the art of picking good quality stocks and you're now doing your stock investments. Okay, what you find risky, Sunita, is the credibility of the borrower. Like, you think, how do I trust the borrower here? Will my money come back? Even if the company has done its assessment, risk assessment, still I feel that I can't trust the borrower. Veena, good morning. Pratibha, good morning. Rakhi, you feel taking loan from a government registered platform is better? Yeah, but Jim your mind. There are many borrowers whose credit worthiness is hit and they cannot take loans from banks and institutions, right? Because their CIBIL score is hit. Now mostly such borrowers will go to these platforms who already do not have that kind of credit worthiness. Yeah, so already the kind of borrowers coming in are not great. I mean, great in a way that they don't have a track record of paying the money back well in time. Got that, Sunita? Usha, got it? Got it. I love that smiley coming in. Kaveri is saying people think that stocks are risky. But this sounds far more uncertain. It depends on so many non-measurable factors. At least stocks can be studied and measured. Yes, and it is a well-regulated market. Stock market is a well-regulated market. And it has a track record of creating wealth for its investors. Educated investors, knowledgeable investors, investors who know what they're doing. Preeti is saying because this doesn't appeal to me at all. The borrowers are generally very vulnerable and desperate people. And I don't want to be in any way responsible for sending debt collectors after them if they default. Got that? Bingo. I love the perspective Preeti and Kaveri both are bringing. There are very high chances of default here, because already the borrowers do not have that kind of credit worthiness. They can't take the loans from banks and financial institutions, and hence they are here. At least that's how it occurs to me. I'm not saying that's the truth, but that's how it occurs to me. Sunita is saying the risk assessment is tech driven. Yes, it is tech driven, and even their e-commerce, their social media is tracked. Yes. So the assessment does, even when I read about the assessment, I felt, yeah, there is something there. But still, it is far right now from, it is far, how do I put this? It is far still from buying into, the investors' interests. Serious investors, okay? I would say seasoned investors' interests. Like a person like me would not invest here. I already am generating great returns with my stocks. Why wouldn't I go there? And where there is a base, there is a company there is a business which is performing well, and I know in the long run its stocks will also perform well, and I will reach my goals with that. I don't know why I would risk my money for this. It occurs gambling. It occurs, like Preeti created, she just created here. That how desperate this appears. At least that's how it's appearing for us. Raki, don't you think so? Don't you think so? All the more reason you can't risk giving them money who are not good paybackers. Yeah. People who don't pay. Or people who don't maybe have the capacity to pay, or the skills or the capabilities to pay. And why would we give our hard-earned money to such people? So I wouldn't say that somebody who's an investor, a seasoned investor, an educated investor would invest in P2P lending. I'm not sure. Doesn't occur a great investment option to me as yet. Rajeshwari, in Women on Wealth community, some singles have shared that they are not getting loans through banks. Maybe they can explore this platform. Yes, please. People who are not getting loans, because their CIBIL score has been messed up with, or something is there. Raki saying, I think angel investor is a better option. Sure. I don't know. I have seen in Delhi, guys, there are areas, okay, that I know. And in these areas, like here, the P2P lending platforms that are being talked about are more organized. They're organizing this business. But I already know people in Delhi who run these businesses. Right? That if you're not getting a loan from the bank or financial institution, there are these private lenders you go to and you get the loan from them. That's how you do it. Right? That's how you do it. So yeah, P2P lending is that. Sunita, you're saying in case of default, the platform won't help fully to resolve the issue. The platform will help with no 100% guarantee. Yeah, absolutely. It did its risk assessment. It showed what the borrower is to you. Now ultimately you took the decision of giving it to that borrower. You signed the document, so you're responsible, right? They are a platform. They are just a platform. Ultimately, each one of us is responsible for what we do with our money. Nobody can be blamed. And if we are blaming other people, then clearly we are being victims. Right? We are being victims. So that's what it is. Okay, let's look at invoice discounting, okay? That's another alternative investment I want to talk about today. Okay. Raki saying, good learning again, Priyanka, thanks. Sure, thank you so much for coming in and taking value. You can learn only when you derive value, right? I can be creating value here for everybody, but then there are people who will derive that value. So thank you for being that person, Raki. And to each one. Preeti is saying, these platforms are generally quite exploitative. Got it. Don't know. I've never been there. I don't plan to be there. Kaveri, it is true that there are some very sound people who are considered credit risks because of an unequal measuring system. That is unfortunate. Okay. I'm not getting that, Kaveri. Maybe I'm not reading it right. You're saying it is true that there are some very sound people. Yes, there are very sound people who are considered credit risks. Okay. I'm not getting this. Okay. As an individual, can I differentiate the good from the bad borrowers? Well, yeah, that's a great question. Can I differentiate the good and the good from the bad borrowers on these platforms? And do I have the time and the skills to do this homework? Well, yes, if we build the skills, then we will manage to do it. But, the already existing skills I would like to use first. Like I've already, built huge skills with stocks and selection of mutual funds and diversification. I would personally, for my personal investment portfolio, want to use these skills to, the optimum level and create wealth. Why should I now move into, these newer areas? I don't get the point right now. Or maybe, I'm just too comfortable. I don't know. I'm just exploring, being in an inquiry myself. Right? There's no right or wrong answer to this. That's how I'm thinking. Preeti, I choose to do P2P lending to people whom I know and trust. Yes. Got it. Yes. Absolutely. That's been always there, right? That's always been there as an unorganized model. This already exists. Many private lenders and, I am somebody who stays away from lending. I do not give loans to people. Because if I'm giving money to anybody, it means I'm just not expecting it back ever. Either I will not give. If I'll give, I don't expect it back. It's that clear. It's that clear, it's that simple, and that's it. Yeah, you do it, Preeti, without charging interest. Got it. I got that. Okay, invoice discounting, everybody, what is it? So vendors of goods and services usually get paid after a time lag. If you notice, there are many vendors, right, who will give goods and services, their goods and services, and their payments only come late. 30 days, 90 days time. And their cash flow gets jacked because the payment cycle is so long, the cash flow gets jacked. So now to better manage their cash flow during this period, what they do, these vendors typically approach a bank or a financial institution. And then they get the bill settled. They get the bill settled in advance by selling it at a discount for upfront cash. So say you have an invoice, now you're selling it, okay? You're settling it in advance. You're selling that invoice, you're settling it, and there is a certain percentage which is earned by the bank or the financial institution, which actually redirects you to different platforms. So in this article, they're talking about these platforms like Giraffe, JIRAAF, Trade Cred, Credex, and Oro Wealth. And they're connecting vendors with individual investors who will help them generate instant cash against their unpaid invoices. So the deals usually run for short tenure, 30 to 90 days. The minimum investment is up to 1 lakh, and the pre-tax returns are generally as high as 11 to 15%. And invoice discounting is very different investment proposition, is what ET was saying, compared to other alternatives. The credibility of the entity that will make the payment against the invoice is critical. Again, like in P2P lending, the credit worthiness of the borrower was important. Here, the same credit worthiness of the vendor is important, right? And the platform verifies the authenticity of the raised invoice and payment history of both vendor and buyer. And in most deals, the platform insists on post-dated checks. So the platform will take post-dated checks from this vendor, and the buyer, will have these post-dated checks for the entire invoice amount. And the balance, okay, is what the buyer makes. And this platform also makes from there. So also personal guarantee may be asked for. So this is a little more secure. Like P2P lending was completely unsecured lending, right? Completely unsecure. This is a little more secure. There's a personal guarantee from the promoter. All payments are normally routed, okay, through an escrow account, and the platform has the first right to it. There's enough margin of safety which is left for people to benefit from. So what do you think about this, guys? Would you want to try this on? What are your thoughts? Preeti is saying the method she tried of P2P lending, she gave the money only to people whom she knew and trusted without charging them interest, and she's been fortunate that it has worked for her. Got that. Rakhi saying, oh, that's again a news to me. Wow, it makes sense, but then only if you're ready to pay a value for it. Yeah, absolutely. And who knows, the payments don't come in time, right, for the vendor, and then the vendor has to, the vendor has to, right, it has to not pay and then default, and then we are the ones who will struggle as lenders. That's how I think. What are you guys getting? Are you interested in investing in such alternative investments? Would you want to try them on? Sugandh, she's saying, yes, what if the vendor doesn't get the payment? That's worrisome. Absolutely, Sugandh. That's really worrisome. Absolutely. Rakhi saying, yes, again, risk taking. Need deep diving in it again. Yeah, absolutely. And there's no track record. Remember that, like stocks have that track record. Businesses do have that track record. Properties. But such investments do not have track record as yet to create wealth for its investors. Preeti is saying still too much headache. Absolutely. So guys, that's it for today. For me, these alternative investments are a complete no. I ain't going to trust them, invest in them, add all my hard-earned money. I would like to keep them for investments that are already making money for me, whether they are stocks, mutual funds, bonds, and other investments I do. And I will keep maintaining the diversification in my portfolio. Is my personal take for my investments. And you see what makes sense for you now as educated investors. I've educated you, and now you got to take your call, because ultimately you got to take charge and you got to be responsible for your decisions and your finances. Sunita is saying not worth the tension I feel. So that. Pratibha, not so comfortable about both. Kaveri is saying sounds interesting, but for me I'm satisfied with my current investment options, and thanks to Women on Wealth, I have faith in my study. The rest of my time and energy into my life. Yes. Can we just live our life? We can't be running after just finding newer and newer investments. So if you're not financially educated, you're not educated by Women on Wealth and its courses, I highly recommend you come in, try out the courses and see what is possible for you. And women who've done the courses, let's stick with our investments. The investments we've already chosen, handpicked, and let's keep moving into them, deep diving into them. राखी, moral of the story, अपने म्यूचुअल फंड अपने मनी जिम फंडे बिल्कुल ठीक है. Yes, absolutely. मनी जिम के फंडे बिल्कुल ठीक है राखी. If they work for me for 17 years, they'll work for you for the rest of your life and my life. Sunita, thank you Priyanka and Women on Wealth for inculcating, inspiring the habit of reading Eating Wealth. Now I look for every Monday for my copy and read at least one article every day. Proud of you, Sunita. Really, really proud of you. You know, it's one thing knowing something, getting informed about something. It's another to implement it. And today, the biggest thing you've done is you've implemented. You've learned it. You've done it. Great job. Beautiful job. Diksha, new learning. Clients have not paid during and after COVID. Weird situation. Okay. Got that, guys. Thank you for participating. And can I invite you to share this video? It will save many people from doing wrong investments. Trust you me. If you share this video, you will be really collecting good karma because you will be spreading a video that will help people to not pick bad investments, to not pick investments that might be enticing in the short term but not something for the long term. So please share the video is my request and talk about Women on Wealth with people in your life because trust you me, we're the only platform I know which is with authenticity moving women forward towards their finances. So yeah, start going. Start telling me that you're with us in this mission. We're not alone. We have your company. We have your support. Diksha, Preeti, Kaveri, thank you for sharing this video. What an absolute privilege having three of you really with us, championing the cause. Everybody, we're committed to making 50 lakh women financially educated by 2030. We plan to bring a wow township to the world where only women will manage to buy and sell properties and have absolute financial security in their lives. So this is the larger vision mission that we come with, and the intention is that women are seen as wealth creators and no more just as nurturers and people who are dependent. So that's the note, okay? That's the keynote I want to leave each one of you, a thought I want to leave each one of you with. Sandhya, thank you for sharing the video. On this note, I'm closing this live. Please keep coming. Please keep working on your financial goals. If not you, who will? Take charge. Stay safe. Bye-bye.